learning circle series to help grow the field, and we're working on online quizzes so that people can access these services right now across San Francisco more easily. A couple of our new initiatives that we have going on, Olivia, I think you mentioned Getting On to College, that's launching in January, fingers crossed, and that will see in the first year 1,200 public school students receive a $50 savings account at Citibank that can only be used for college. Kids on free and reduced lunch get an extra $50. That helps the school, provides an incentives for to apply for that program. And then through philanthropy, we've raised a $100 match. So for the first $100 our family can save, they get $100 from the community. We're hoping to expand that pool of savings matches and incentives. And Steve will be happy to hear that we're actually launching a 100% electronic pay campaign in San Francisco. My boss doesn't like, small goals, so he has decided that we should be the first paperless payday city. I'll get right to that. Done all this other stuff, but so we're actually now looking at how we can expand and evolve in line with advances in technology. So when we first started Bankcon, someone would come to us and said, "Can you do a prepaid card?" We would have said, "We don't know what that is," and I don't know if we can. Now, 5 or 6 years later, we can look at those types of products and really see how we can integrate them and how we can use the same methods that we use with Bankcon to say, okay, if you're a prepaid card provider, you must have these kind of terms and conditions on your card, and if you do, we'll tell people about it. So that's kind of our next phase. Just briefly, I'm sure I'm going way over what should we say. There's another, I mentioned scale, there's a national agenda, of course, around financial empowerment work. So one of the other things we've done is to create cities for financial empowerment, which we created with New York back in 2008, I think. And there's 11 members of Cities for Financial Empowerment. To be a member, you have to have financial empowerment work embedded within municipal government, so you can't just outsource it to community groups. You actually have to be looking at how you do that work within the government. And Los Angeles is one of the 11 members of that, along with many others, including Chicago, San Antonio, Savannah, Seattle, Miami, and some other obviously forgetting. So through that group, we're really looking at how we can have a national voice for financial empowerment work. So that's 11 big city mayors now who are signing on to support these policies at the federal level. So we supported credit card regulation, credit card reform, we supported the creation of Bank on USA, we supported the overdraft regulatory changes and those types of things. So I'll stop there.
Well, that's a lot. Lee, while you were talking, I looked up what innovation means on dictionary.com on my iPhone.
Did I get it right?
No, but it's just fascinating sort of looking at the theme that's connecting all our panelists today. The definition says something new or different introduced. And then the second is the act of innovating, introduction of new things or methods. But oftentimes in innovation, and I'm kind of a techie, so I love sort of what's happening in that field, and they're always talking about innovation. But innovation doesn't necessarily mean you have to create something totally new. And I find it fascinating how, what Katie talked about, how Broadway Federal was really rooted in the bank and is really exploring still how they could be relevant with the changing demographics in the community, leveraging the nonprofit partners that are in their community. That's innovation, but it's leveraging existing stuff. And then Jesse, of course, is doing the same thing, but even thinking about opening up his bank and even transferring that bank to the community is so powerful. And then Steve, is leveraging debit card technology, sort of the way I look at it, and how that can be used as a banking product. And then Lee's thinking about, we have sort of all these elected officials, how can they jump on the bandwagon of accessibility, and how can they play a role in pushing something forward? So that's kind of the way I sort of, in my own mind, sort of wrapped everything up, what everybody said. But I'm really interested, I'm going to start transitioning to a Q&A with the audience. So if you guys have questions, just go ahead and raise your hands and I'll come over to you. But to kick that off, I wanted to ask about failure. Because in these innovations, I also think that sometimes you fail. And Katie, you touched on it a tad bit when you were talking about how, we had, I wrote it down in my notes, you had a product and it kind of didn't work out that well.
It was a prepaid card.
Oh, it was a prepaid card, okay.
Absolutely.
Can you talk, I'm going to give it to everybody in the panel. Can you guys talk about failure or something that you tried that didn't really work that well? Or even in the development of Bank on San Francisco or Green Dot or the Second Chance Checking, can you talk about what you learned?
yeah, I mean, I can definitely comment on that. This was before my time at the bank, but there was an interest to try and come up with some alternative products to really try to address some of the needs of our customer base. And so we tried to implement a prepaid card that we sort of serviced internally and kind of managed, and it was a fully branded Broadway Federal card. It just completely fell on our face, and we lost tons of money. We had issues with verifying identity. I mean, just all the things that I'm sure Steve does extremely well because he's been doing it for 10 years. We tried to do and didn't have the internal expertise to do it, and it was a disaster. And one of the unfortunate, I think, results of that was a fear across the board of trying, I think, to move into that direction. You know, I've been at the bank for about 4 years now. Definitely bring a more youthful flavor, I would say, in terms of, you know, senior management. Just, I think, an excitement and an enthusiasm about getting back out there and figuring out how we can do this, but do it smarter, make sure we're partnering up with the right people, and realizing that we don't have to do everything in-house. And I think that's the biggest lesson. And why not go out and find people like Steve and other third-party vendors that are doing it exceptionally well, as long as their activities fall within our mission. As Jesse mentioned, you know, we're very conscientious across the board, whether it be partnerships from the community level, whether it be investors as well, just making sure that whatever new, you know, sort of stakeholders we bring to the table are going to maintain a conscientiousness about our mission as well. And as long as we can ensure those things are in place, there's more of an interest in moving down that road. And so that's really where our activities are being just drawn from now, is how can we bring in people who are experts at doing it. And we bring the brand, we know our communities, we're in the communities, so we can match them up pretty effectively. So that's the idea.
Thanks for that question, Rudy. Those people who work with me know I love the topic of failure. Carlos is here with me today. He hears me talk about failure all the time. I really believe that in order for anyone, personally or organizationally, to succeed, you have to fail. You have to fail. The question is the cost of those failures. The question is, can you set yourself up to fail in a manner that's not going to put you out of business? You know, most of us have gotten to where we are through a series of failures. And so we can't be afraid to fail. Banking in particular is a business of risk. If we eliminated the risk from the equation, we would not make any money. I make money on loans. And what I do is I try to mitigate that risk by making loans to those folks that I feel are going to pay me back. But at the end of the day, I don't know. Certainly the last 2 years have shown how little we know about things that happen outside of our control. Folks that have historically been perfect borrowers for decades have suddenly found themselves to be, from the standpoint of risk, very risky. And so I think failure is a necessity. When it comes to this market, there's something that we tried last year, and there's some folks that were here that were there last year. When I got to the bank last summer, one of the things that I wanted to do was really hit the ground running. And so we put together what we call the East Los Angeles Financial Literacy Task Force. And this is a task force that's comprised of elected officials, local nonprofits, and other stakeholders. And it's a group of about 25 folks that are interested in improving the local community from a financial literacy standpoint. And so one of the first tasks that we put on was something called it was the first East LA Financial Literacy Conference. We're all excited, and this is going to be a day-long event where we're going to bring stakeholders from all over, and you might have even been there, I don't know, but we had speakers, and we covered, reverse mortgages, and we covered mortgage fraud, and we covered savings and asset building, and we built this thing, and it's not true like what the movie says. If you build it, they will not come. No, it's not necessarily. We didn't do a good enough job of really penetrating with our trust agents. Unfortunately, like I said, I had just gotten there, and I thought that we had done a better job, but it wasn't quite there. And so we had this event in the summer of last year, and from my view of success, it failed. We had a limited number of community members come out. We had food left over. That's usually a sign to me that something has not been a success, is when there's food left over. So it was a failure. And so we immediately regrouped and we said, what's it going to take to do this? And we put into place, we said, well, we need to penetrate deeper. We need to get these organizations to realize that if they don't participate, if they don't pull their end of it, that the whole community loses out. And we need to make them accountable as well. And so what we've done is we've sort of tweaked the process a bit. But that was, for us, relative to this whole unbanked, underbanked issue, for us, that was a recent failure, and it stung. Certainly, I don't think anyone likes to be there on the day of the event and sit there and say, gosh, this just isn't what I expected. So it was painful personally. I mean, my ego took a hit. I got to be honest. But at the end of the day, everyone regrouped, and next summer, certainly when we have the second annual East LA Financial Literacy Conference, it's going to be standing room only, because my pain was shared not only with myself and my staff, but really all of the stakeholders that helped put this on, and we all felt equally bad about it. So that's an example of a recent failure that we experienced.
Steve, did you want to comment?
Well, just briefly, there's probably too many for me to recount here. But I will say this, we've discovered a formula, and that is every time we fail, and Green Dot at this point is, we've had the same employees in many cases for a long time. Every time we fail, it's because we haven't taken the time to understand the customer experience. Every time. And so now you'll see as an organization, everybody stop at the conference saying, whoa, 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 go back to the research, or does that make sense? Would you run it by somebody who doesn't work here to see if that makes sense? But it's things like that. Operationally, designing these complex IT systems that make sense to compliance, and they make sense to risk, and they make sense to the board of directors, and they make sense. And then you roll it out, and somebody does, and you say, why is that? Well, when the customer reads such and so on the package, they think you mean this, not that. You say, oh my God, how stupid can we be? They have to go back and throw out a couple of my packages. So we're really much more cautious, and as a public company, I've also now learned that if you make mistakes, it better be invisible. In other words, make them on a small enough scale so you can just pretend they never happened. And then you move on to the next issue.
I will be very brief because politicians really don't like to talk about failure at all. I think what we have learned more than anything is that if there's not a business case for this work, you're going to have a really hard time engaging for-profit financial institutions. And this time last year, we issued an RFP for a partner to hold our kindergarten and college savings accounts. And we thought, the city are guaranteeing within the next few years 5,000 new college savings accounts a year and access to every single family in San Francisco public schools with money that we're putting in, with matches available. Guess how many responses we got to that RFP? 0. And I think because it's too new and people don't know yet that it's really going to work, and also the fact that we're told large numbers of small dollar accounts aren't necessarily very appealing to these large financial institutions. And even with our 529 provider at the state level, that was the same response. We had issues of, how do we open accounts for people without social security numbers? San Francisco is a sanctuary city. We don't track social security numbers, so there's no way we'll be able to provide that information. And so what we thought would be, we'll just open it up and people will flood us with their, partnership opportunities. But so what we've learned from that experience really is that you have to have a strong business case, and that sometimes you've got to find someone who's willing to take a risk, and luckily we did find that partner eventually in the city bank.
Before I pass it on to Jamal, I think it's interesting too, because it doesn't only apply to banking. I know we have a lot of bankers in the room, but it also applies to sort of a nonprofit or community-based organization. Knowing the customer, education, not failing too fast, you don't go out of business and all that kind of stuff. I think it really applies to all of us here.
Jamal Clement with the Center for Responsible Lending. First of all, thanks for having this event. It's great to see other people talking about a lot of the issues that we work on, because I'm usually the guy being called a commie when I sit among guys like you. So thank you for that as well. 2 questions. I'm going to be greedy because I wanted to ask one question the last term, but I think the first one is a slow pitch, and I'm also sort of embarrassed for asking it. But how do you get the community bank designation? Can you talk about what that process looks like? I'm just not familiar with it. And then also for Steve Straight, perhaps you, Lay, as well, we've been looking at debit cards and certainly a lot of the prepaid card banking issues for a while. And Green Dot, to their credit, or to your credit, is a very good company. But your competitors, by and large, are just up and down the scale in terms of charging excessive fees. And I would say a great majority of them do charge excessive fees. So my question is how do we begin to work together so that we can bring everyone onto the same level playing field? I mean, there are fees that you get charged for going to another ATM, for charged for putting money on, for loading your card, for taking money off, for using someone else's ATM. It's just ridiculous.
It's bad news. Well, you know, Paul Leonard and the folks in the organization too, we work with CRL. The answer is ultimately a combination of regulation and free enterprise will take care of that. I mean, you know, you'll see in the press, OAP will write a story about, and the Nexus card charges it. The good news is Nexus cards issued about 7 cards, you know, so I know sometimes over time, the smaller companies will keep getting smaller and they'll become a norm, a fee model that's a norm. But then you'll have the Kardashian card, which, you know, is in all the range. I mean, well, Russell Simmons would claim that he has a really, really low price product relative to his thing, but everyone does their own thing, and it's very much free enterprise, and they would argue that there's expensive banks and there's cheap banks. So we don't know, but we try to stay very, very close to our regulators. We're very supportive of almost all the bills that come down the pike. We have a large government relations team that works with us on Capitol Hill because we never want to be painted with that brush of being in some way disrespectful of a population base that needs maybe more care and more consideration than maybe another population base. I guess that's the best way to say it. So, but you're right, there are some wacky companies out there, and over time disclosures are going to become easier to compare for consumers. Certainly Elizabeth Warren's team will see to that. And I think a year from now it'll become less of a big deal, but you're right, it is a problem.
You guys keep asking these great questions. Community bank designation, there is no definition. There is no definition. It's some, is anyone here from Wells Fargo? Last summer, and I was just sharing the story, and I love Wells Fargo. So I really love Wells Fargo. They're a great bank. But I just want to give you some context. There is no definition. Last summer, there was the California Bankers Association had one of their folks, a fellow, great fellow actually, who heads their Northern California region. And in there, in the article, he was quoted in the magazine CBA, which is also a great organization we belong to, said that Wells Fargo is the largest community bank in the country, is what the statement said. And I sat there, and I remember Carlos was sitting outside my office, and I sat there and I just started to laugh. And I thought, you know, what are you talking about? What, you know, and then at that point I started researching. Well, you know, how is community bank defined? And I realized that there is no definition for community bank. Community bank is essentially, if someone wants to label themselves a community bank, they can do so. I have my opinion. Then more recently, as you recall, Obama signed the bill for $30 billion in aid to small businesses. And if you read the legislation, it defines a community bank as a bank that's $10 billion or smaller in assets. $10 billion. So I went on the FDIC site to see how many banks in the country are at $10 billion or smaller, and it's 97 or 98% of the banks in the country are under $10 billion. So, so there is no true definition of what a community bank is. I can tell you, Broadway Federal is a community bank. I can tell you, Pan American Bank is a community bank. And I define it as a bank that has a particular footprint, a small focused footprint on a community. A bank that can take my deposit and export it across the state lines to another one of their banks is not a community bank in my opinion. But no one is willing to go out on the line and make this case because there's too much at stake. So, you know, what is a community bank? You know, then what I say to folks is, well, find a bank in your community that when you think about that community, that bank comes to mind. And if it's Bank of America, great, because Bank of America in certain communities is the only bank. Wells Fargo in those communities is the only bank. So I suppose in a sense they can be deemed community banks. But theoretically, what is a community bank? A community bank, in my opinion, is a bank that is probably under $1 billion and that has a very focused footprint that serves a particular niche, and that stays in that community, that doesn't have necessarily the ability to shut down one office and open up in another part of the country or another part of the state.
That's an emotional question. You should go to icba.com. That is the Community Bankers Association trade group. But there are some legal definitions. It's almost always state chartered, not federal or national. So it's a California bank, or it's a Arizona bank, or it's a North Carolina bank. And it typically has the name community. The board of directors and the funders and the people who deposit typically are made up of local communities. In the old days, doctors formed a lot of banks. Trade groups, farmers and merchants in the old days, but yeah, the local footprint. So there are some legal things we're driving. And then we have this conference at B of A, we get equally passionate in saying we gave more money to the community of Pasadena last year than every Pasadena community bank combined. And so they'll argue about the relevant, but emotional, interesting question.
Hi, Janice Butler from NCLR. So I have a question. Several of you talked about regulations, and in particular, I was pained by the idea that regulations might be destroying community banks.
That's a given.
Well, from some corners of the industry, every time you try to propose a protection, it's like, well, you're going to put us out of business. We'll no longer be able to provide our predatory credit to the community. On the other hand, we know that regulations can actually be, well, maybe we don't know. I would assume that in some areas regulation can be helpful. And I'm sort of a one-note person on my panel talking about, are there ways that we can use CRA to direct deposits or something into smaller institutions? Besides everything that we might know about what's going wrong with regulations, I'm wondering if you guys have some ideas about things that would be helpful to community banks or to real innovative service providers on the regulatory side that could actually help you and help facilitate the delivery of credit. I think in one of the panels we also heard about some of the regulatory barriers that prevent things like some crossover between certain financial service providers and banks. I'm curious about on that side of regulation, what would help you help people?
Well, and I'll be honest, I think Jesse will probably answer the question better because I'm not at that level in terms of really, really managing through our regulatory exams, although but to answer your question, the comment you made about changes to CRA and making it, making transparency become something that actually is required, or, just sort of the accountability, really making sure that, when a bank says they're doing, a service or they're providing a specific CRA activity, that's really happening. I think the difference is that, for example, our business activities every day for the last 64 years have been CRA. We're not the bank that you're coming after, in terms of making sure we are complying and getting our CRA activities done. It's very easy. So it's important to kind of make a distinction, and I think that's why Jesse is passionate about community banks and our ability to sort of own that. It's key because Broadway Federal is a community bank, we're a minority bank, we're a CDFI bank, we're all of the different designations to let people know that there's a difference between banking here and banking at a Bank of America or Wells Fargo. And not to diminish what they're doing in communities too, but there is a very distinct difference. So absolutely, we are, a part of some of the policy discussions through some of the lobbying organizations like the CDBA and the CDFI world to try and get a lot of that CRA regulation adjusted, and just sort of what am I trying to say? Just really focusing on the sort of actual implementation of it as opposed to kind of what is just written on the page. But I'm sorry.
I'm sorry. No, go ahead.
You're done? You don't want me?
No, go ahead.
Well, let me say, I guess I should start this by saying my first job out of college was as a bank examiner for the Office of the Comptroller of the Currency. So I have lived the life of a regulator. Notice I'm not there anymore. No, but and so I get it. I know why they do what they do, and I understand what their objectives and goals are. Having said that, every decade or so, we get into an era where the pendulum swings to an extreme, and I think we're seeing that now. I mean, with Dodd-Frank, Basel III, and a number of other items. And the problem, and there isn't no problem with regulation of financial institutions. There's a lot at stake. There should be someone keeping their eye on what's going on. The problem that we haven't been able to find an answer to is that these regulations are not applied evenly to community banks. The expense that it takes to comply with the regulatory with the regulatory regime, whether it's a state or a Fed agency, the cost for a small community bank is the same as one that's maybe of the size of $800, $900 million. So if you look at the cost as a percentage of revenue, as a percentage of assets, or whatever metric you want to look at, it really is lopsided. And there's no real way to get the regulators to ease up on it. So it's so every time new regulation is passed, it's very significant. As Kiwi said, these regulations generally are not passed because community banks are not doing what they're supposed to be doing. In most cases, they're doing more than they're supposed to be doing for one reason. If we don't work twice as hard as the big banks, we won't get half the business because we don't have the marketing budgets, because we don't have the cadre people, all that stuff. So, I mean, Rudy knows this. He'll get emails from me at 2 o'clock in the morning, and I'll sit there and Kiwi the same way. I mean, we all have to work. Now, we do this because we love it. We do this because we love banking. We do this because we love the communities. I grew up in East Los Angeles. I was born and raised in East LA. I was born there. I rode my bike in the parking lot of the bank that I now am CEO of. I mean, how amazing is that? And so we do it because we love what we do. But like I said at the start of the session, the regulators are starting to take all the fun out of banking. And the last thing you want is to have a cadre of disenfranchised community bankers decide they don't want to be a banker anymore. I'd rather do something else. It will leave a tremendous hole, And so I don't know that there is an answer to this, certainly. It's difficult. Like I said, I mean, I think the fact that I was a former regulator myself gives me quite a balanced point of view. And so I say, we just have to tough it out. We just have to continue. But I can tell you that things are not getting any easier for community banks. We have to go out and raise capital now to grow the bank just to maintain our revenues to the point where we can maintain the operation. For 45 years, we've been able to be a $40 million bank and produce dividends for our shareholders. Can't do that anymore. We can't. The economies of scale have changed, and that the economics, the regulatory environment has all changed. So now it becomes a lot more difficult for us to do what we do at the same size. So this is true of Broadway, and it's true of any community bank. So so as you think about things, and to the extent that you have input on any of this stuff, I'd say consider that. Specifically the CRA question and its effect on direct deposits. Again, that's not targeted at community banks. That's targeted at the big guys. That's targeted at the guys that are taking in, what City of Los Angeles has about $6 billion in commercial bank deposits. Most of those are probably in New York money center banks. I know Broadway has the benefit of having some of that money, but it's peanuts of that $6 billion bucket. So what ends up happening is those regulations are targeted at the bigger banks that need a little more help. Not that they intend to be bad corporate citizens, but when you have such a large organization, it really does become difficult to keep your eye on one another, and so that's why these regulations are passed. Having said that, I could use a little less regulation and a little more love from the regulators, for sure.
We have 2 more minutes and like 5 or 6 more questions from the audience. So what I'm going to do is I'm going to use my moderator's prerogative and ask a question about the older event. And I know you all touched on different ages. Jesse talked about youth. Everyone's doing different things. How are you, in your innovative minds, how are you serving the older unbanked? Do you have any ideas on how we can target the 50+?
Yeah, I think we have a few ideas. One of the things that we, again, from our vantage point of being local government, we can work with our district attorney's office on elder protection, so looking out for fraud and other issues that are crimes being perpetrated against older people. We are doing financial education into older San Franciscans through our connections with community housing and affordable housing providers. We're finding that being unbanked, at least in San Francisco, isn't as big of an issue as access to credit. So our payday loan alternative is actually proving to be a really popular product, and you can get that product if you're on a fixed income. So that's something that we're looking at. I think as we're segueing into more electronic forms of payment, and I think the federal government has decided that they're going to stop issuing checks sometime, I think, in the next 5 to 10 years. So how do we support people in that transition if they're not familiar with getting electronic forms of pay, like direct deposit to a bank, a checking account, or to a pay card? We're working to set standards for pay cards, at least locally, right now using the market, because we don't have regulatory authority, but we'll say, if we're going to promote your product as a good product, this is what you have to have in place. The fees are going to have to look like this, et cetera, et cetera. We have worked with our in-home support service union. Those people having a hard time getting back to the state of California wouldn't pay them by direct deposit, which was a bit of a problem. But we've worked with that union over the last few years, and they represent their employees on average work with 5 to 7 low-income, elderly, and disabled San Franciscans each. And one of our great stories is we did a mailing to the in-home support service workers, and one of them banked 7 of his elderly clients, all of whom were unbanked, because one of his jobs was to take them to the check casher every 2 weeks. And said it was terrifying, completely terrifying, to have to escort those very vulnerable people through very poor neighborhoods, and everybody knew what they just walked out with, in their pockets. So this is why I think it is a really important issue, and those are just a few examples of what we could be up to.
Well, so the trick for us in terms of seniors is how can you get seniors on direct deposit for all their myriad of benefits? Could be state, federal, maybe they have a part-time job, maybe they have a relative or somebody else who's further supporting their income, and the money's all over the place, hard to track, hard to frankly know who's taking it, depending on how old the individual is and whether or not they're able to care for themselves. And so we're always trying to find easier ways to get direct deposit, and work with the federal government on Direct Express, which is a way to just click a button and your Social Security benefits or disability benefits are automatically put into a regulated bank account, those kinds of things. The other challenge is once we have, because 25% of all of our customers are in fact over 50. As a guy who's 49, I don't think that's even remotely old or senior. Every time you get 10 years older, being a senior citizen is 20 years on top of that. But anyhow, so, but how do you make the program or the product seem new age and contemporary? Because I don't care if you're 150 years old, you want something new age and contemporary tomorrow. It's just a natural desire. But at the same time, explain it and roll it out in a way that's not complex and doesn't require something that is a too new age in terms of how to use the product. And that's really been a challenge. So if you're 25, you can't wait to get the iPhone to take a picture of your check and deposit it with a photo capture image. If you're 55, you're less likely to want to do that, and you're likely to dismiss it as a lot of nonsense, and you just want to figure out how to get your check deposited quickly. So you have that balance, right? So the communication balance, marketing message, and then getting people to know where their money is and to be able to count it on statements and safe accounts. I know that's basic, but those are some of the bigger issues we face the older the customer gets.
Unfortunately, we have to wrap it up, guys. But thank you so much for joining us. I mean, I learned a ton, and I'm really sad actually, because I know you guys have some great questions. Sorry. And I have a ton of questions, but again, use those cards that are on your table if you have any sort of, if you wanted to connect with one of the folks up here, or you have other ideas that you wanted to pitch, definitely do that. And so with that, we have 10 minutes to 1:30, and in our effort to get you guys out on time and off to your afternoons, I want to welcome back Joanne Jenkins.
I want to thank this panel and give them a round of applause. It's been a wonderful afternoon and morning just talking about how do we address the needs of particularly for us at AARP Foundation of the 50-plus low-income vulnerable. And yet we know that we can't go into a household and address the needs of that older American without addressing the needs of the whole family. And we've heard a number of innovative ideas that's going on in several of the banks and in city governments around savings and college loans and services that grandparents can provide, as well as really trying to educate and provide financial literacy for those for birth and sort of going through that. So I thank all of you for coming. I want to just do a quick rehash of some of the things I heard today, and really this whole conversation today is really about how do we come together to help solve these issues. And so collaboration was really something that I think that was very meaningful, that we know that we can't do this alone, that we all need to be working together and understanding what the issues are in this community of the underbanked, unbanked, underserved, of going through that, and how we can partner together to come up with solutions, not just for solving today's problems, but how do we solve long-term solutions about investing and financial literacy and really helping people get to a point that they can manage their own money and also become investors and savers. I think one of the things that was really telling for me is from the second panel of thinking about, particularly in the Latino community, folks who are making, in some cases, below average wages, but they're saving the amount of money, and they're still sitting home, perhaps outside of the U.S. for that family. And how do you, well, this is one of the things that we're trying very hard to do at AARP, the relevance issue, and how do we put ourselves in the shoes of those who we're trying to serve, and thinking through how innovative and how creative those folks who are managing that money and living here in this country and still trying to take care of family or relatives who may not be here, or in many cases who may be here. So I think the whole idea of collaboration and this whole idea around innovation. How do we come up with innovative products and services like you've heard here today from community banks? I agree with you on your definition of community banks as well. In my mind, when I think of a community bank, I think of those institutions that are there serving the community, that you know my name and I know yours, and you're concerned about what's going on in our community, and whether that's a threshold of a billion-dollar bank or not. I think it's something for the regulators to decide on. But this whole idea of innovation, how do we come up with solutions that we can multiply, using San Francisco as the example, and now 70 cities around the country are doing this as an example. Those are the kinds of things that we're looking for with the AARP Foundation to do it. And then this idea that our country is becoming more and more diverse. I was reading an article last week in the Wall Street Journal, and it was talking about, for the first time, the major banking institutions are looking at this issue of the low-income segment. And for the first time, thinking about this may be a segment that we can make some money off of, that they have written off for years and years and years. And now as regulations get tighter and tighter and they're looking for more ways to make money, that a lot of, I'm not sure what the proper word is, but big banks are looking at this low-income segment, whether it be with debit cards or with other kind of products, to provide service to the low-income community. So I think that we're all on the right track, and I think our job is to make sure that as others move into the market, one of the things that we're trying to do is to move the market, so that as debit cards and these other kind of things come into the portfolio of offerings, that they're not high interest rate loans, that they're not simply taking a plastic card and turning that plastic card into a payday lender, but really moving the market so that the rates that are being charged and the fees that are being charged to folks are reasonable, and not that, you know, we use the Kardashian example, because we were talking about that last week, that it was $99 just to get the card, and thank goodness for the regulators on that one as we go through that. And then for getting back to the relevance issues, that so many of the people that we're talking about serving in this community happen to be Latino and Black, and how important it is for us to understand those communities in which we're trying to serve. And they have different expectations, as we talked about earlier, I think with the first panel, about where they bank, what kind of bank they use, whether it is a non-traditional banking service or whether it's a local community bank or maybe it's they're banking in cash only. How do we think about what we ought to be doing to facilitate the conversations with those communities? And we know that they are more likely to have communications with people that they trust in the community. And how should we be working not only with AARP Foundation, but you and your nonprofit organizations, as well as local community nonprofits and banks, so that we can provide the right kind of service that they need in their community. And then just to touch just a little bit on financial literacy. I think this is what's so important for us, I know, in the foundation and for the communities that we're serving, that we have information that we can bring to the table that explains the process, so that there is not this anxiety around banking and investing and savings and using a financial institution. How do we provide simplified language in multiple languages that address the needs and shares this information with the community in a very dignified way and in a very simplistic way that gives them a level of comfort that they know that they can do business with this local facility or local bank or institution that we're doing. I often tell my staff that when we get to the idea of risk and failure, that it's okay to make a mistake as long as you learn from it and that you don't make the same mistake twice. And so that's one of the things I think that we need to take from some of the examples, that we're constantly trying to move the market. It may not be perfect. I think the important thing is that we're learning from the mistakes, we're moving the market, we're learning from others, and really trying to come up with solutions that's going to be broader than just affecting the individual community that we're working in, but coming up with long-term sustainable solutions that's going to address some of this underbanked and unbanked community. And then finally, to say thank you to not only the California Endowment, who so graciously let us use their building here today, but also the New America Foundation, who co-sponsored this event with AARP Foundation, and all of my colleagues from the AARP State Office. I think it's just been a wealth of information. I thank all of you for coming to spend your time with us today. And we look forward to your continued questions and information sharing, and to Rudy and all the folks. This is the first time that I've been out here since we hired Rudy, but I think he's doing a pretty good job. I do want to say thank you to Rudy and to Barbara, who works in our litigation team. I'm not sure if Barbara's in the room, but we have 22 attorneys in Washington who do litigation for 50-plus older low-income people in the country. And Barb, since we have a lot of litigation out in the California area, we have one of the few staff people, Barbara, who was out helping out the desk out there today. So I thank her and thank all of the folks who came to participate in our program today. So thank you again for coming.